The Omicron scare has gripped the Indian economy. In 2020, companies and organizations wrestled with crashing demand by trimming costs in all possible ways. In 2021, India's economic activity has marginally surpassed pre-pandemic levels, except in a few sectors like travel and hospitality. But overall, we can say that the Indian economy showed signs of recovery amid uncertainty in 2021. Whether this will sustain in 2022, that's the question. Firstly, while COVID dealt a heavy blow to the Indian economy in 2020, GDP contracted 7.3% that year. The ongoing fiscal has seen a prompt recovery. 2022 is likely to be the year when the Indian economy reveals its true growth trajectory. GDP is expected to claw back to pre-COVID levels, with reports suggesting that GDP is likely to maintain a 9% growth rate. While GDP is expected to recover, the same cannot be said about total employment in the country. The pandemic has deepened the crisis of employment and incomes for the poor in India. Number of employed people as of August 2021 is lower than the August 2019 level. A stagnant employment situation will impact India's growth story. Tackling this crisis should be a priority for policymakers in 2022. Not only job and income losses, but dwindling consumer purchasing power can also hinder India's growth. While private final consumption expenditure rose this fiscal to 37 lakh crore rupees, it was still lower when compared to 2019 levels. With the threat of a third wave looming large and people wanting to hold back for a rainy day, household consumption could take a further beating. Let's assess the likely impact of Omicron on India's recovery. Will a third wave derail India's growth? We had a word with Dr. Sunil Sinha, Director and Principal Economist at India Ratings. Listen in. As we see curves beginning to be reintroduced, there's obviously a lot of question on the kind of impact this could potentially have on the economy, given that we were just about starting to see that momentum pick up and had fairly high expectations on GDP. Do you feel that some of those projections will be revised, curtailed, considering the uncertainty around the next few months?
The Omicron variant certainly has raised the uncertainty, but as of now, the impact of Omicron is still, fairly confined. Although, say for example, the yellow alert has been declared in case of Delhi and in several other parts of the country. There may be similar announcements in the coming days and week. But as of now, we are still holding on to our GDP forecast of 9.4% for the current fiscal year, simply because the kind of uptick that we had been expecting post-COVID 2.0 turned out to be better than our expectation. Somewhat, even if Omicron and related issues say impact the economy, some of it has already been taken care of by the higher than expectation growth in the month starting say July till about November, December. So we are still hopeful that economy will clock 9.4% GDP growth in the current fiscal.
Okay, so that's interesting because that's a little on the higher side and you're still sounding very confident. Dr. Sinha, just take us through whether you see an equitable distribution of the bounce back. Which sectors do you feel will still find it hard or struggle to come back? We have seen already, some outperform during this time, while plenty of pockets, for example, on services, for instance, have taken a while to come back. What's your sense going forward?
You are absolutely right. The sectors where human contact becomes inevitable, or the way we call them contact sectors, that are largely in the domain of the services. And these are the sectors which had been badly hit both in 1.0 and 2.0 COVID, and likely to be badly impacted if Omicron which I would call 3.0, really plays out. And in fact, when we look at some of these sectors, the hotel, tourism, restaurant, I mean, they were, still fully not recovered, and they were just kind of bouncing back. And now we have the new restrictions coming in, so they will continue to get impacted. However, the non-contact sectors have, to a large extent, learned to live with COVID and COVID-related, restrictions. So, for example, manufacturing and even agriculture to a large extent, particularly the way the harvest has panned out after, October, November, suddenly gives us the confidence that these are the sectors which are expect or would be doing better than what our expectation was initially. But certainly, the tourism, hotel, aviation sector, they may get impacted once again. So some bit of positives, some bit of negatives, and net, I still believe that we may still land with 9.4% GDP growth in fiscal year 22.